Bitcoin right now trading a scotch below 36,000, Ethereum at 2,500. Um, Look, let's not sugarcoat it. Bitcoin down about 37% in the month of May. If you look at the CoinDesk data, some of these, when there's volatility, especially, you see these the data vary a bit between exchanges, between reporting mechanisms. What are your thoughts, big picture, on where we are right now?
Well, I mean, I did the whole daily briefing, feels like a month ago, but I think it was Monday, um, about this. And my view is corrections in crypto are expected. And I've told everybody from day one that you need to be able to expect at least a 50% correction in the middle of a bull market. And we've had pretty close to that. Ethereum has been pretty close. Many of the alts have been larger corrections than that. So it's expected, it's normal. Within the logarithmic trend, you get these things, but they don't do a lot of damage to the chart overall because the logarithmic trend holds true. So I don't have any issue per se with the volatility. The key of crypto markets is buy and hold and don't use leverage. If you're doing anything else, you're exposing yourself to extreme volatility that's hard to deal with. If you buy and hold it, you just sit and wait, and you use these moments to accumulate. So I put a piece out for Macro Insiders, for Global Macro Investor, and put a piece on Real Vision's daily briefing just to say, listen, you should be accumulating in these kind of sell-offs. Nothing has structurally changed. Yes, there's a bit of a fight going on with the Chinese miners, and I think the outcome, there's a number of different cross currents going on there, but mainly I think it's to reduce the coal consumption of the Bitcoin miners who are using coal. Those are the least regulated of all. So I think that is part of the narrative, and the Chinese are getting themselves set up properly for their central bank digital currency to make sure that that the on ramps and off ramps are all right and that kind of stuff, and regulations in place. So yes, there's been selling from these miners as people have been shut down or people don't know where they are. They haven't got clarification with the Chinese government. There's been the narratives and all the kind of Elon Musk sagas and then other sagas going on. This market price action, to me, feels like it's the fear of the weekend is now upon us, because we had two awful weekends, the last two weekends, and it was like, oh my God, what are they going to do to us? What's China going to announce overnight? Are they going to burn Bitcoiners at the stake? So that's what's going on, I think. Now, I think that these kind of moves require time for the market to digest. There's overhang, there's a kind of general uncertainty. But from my conversations I've had this week, it sounds like there's a lot of institutional money about to come back in again. As I've talked about that feature, there was less institutional money for a while, but I've heard that there's a lot coming. So I think that soon we will have a trend change back up again. If I look at the Bitcoin chart, could it make a new low and then bounce? Possibly. But it's starting to get to the weekly 9 count on DMARC, which is one of my favorite technical studies that from Tom DeMark. And I was even chatting to Tom this week, and he's like, yeah, it could have another new low. But then we start setting up for this weekly. If we had a new low, we'd set up for a daily low and a weekly low, which is an extraordinarily strong signal in that kind of charting technique.
Right. Raoul, so much there. First, we should say, as you and I have both said many times, of course, not financial advice, particularly for retail investors. You need to understand your own risk tolerance. Talk to a financial professional before you dive into these markets or
That's
any.
a big question. Who is your financial professional, and what makes them more professional than you and I talking? Considering we've both been in financial markets for 20 years plus, it's kind of crazy how people deal with this these days. It feels antiquated.
Well, the interesting thing about it is, I think that if you think about what we do here, very different from what someone who's going to do, who's going to look at an individual's risk tolerance, their objectives, life events, those kinds of things. Important that people understand their own risks rather than the market analysis that you and I do and others on Real Vision so often.
Yes, it is. But that kind of life and where you are is basically really your whole investment framework and how much you need to save and invest. For people who have got money that they want to trade or invest their own way, self-directed, they should know what their risks are. People should understand, okay, I'm doing this myself and I'm going to lose a ton of money and hopefully I'll make money over time when I learn. And that should be encouraged. I think we've swung the pendulum. Well, it's actually moving back. we swung the pendulum so far as just trust this guy on Wall Street because he's your expert, to, oh my God, I don't trust anybody anymore. And then we've seen um, the rise of the millennial uh, cohort of people starting to discover trading themselves. And fascinating. I don't know if you go to Wall Street Bets and
Of
read
course.
some of this stuff. The basic thing is YOLO. It is, I know I'm going to lose my money. It's a hilarious game, but if I get it right, I'll make a ton of money. It's like supreme risk seeking. We often see a lot of that in Asia too, where, for example, we see a lot of the cryptocurrency leverage trading. It's a new way, and it's okay as long as you know your risk. If you know your risk is I'm going to lose all of this pot that I've just saved, go for it. If it is I'm going to do it on leverage and I'm going to lose my future and end up in prison, maybe don't do that. You know, it's figuring out how to do it sensibly, but you can still get the most out of it.
Well, Raul, to exactly that point, talk a little bit more about how you think about that in your own life. Just provide a little bit of context, because I know that you have some very sophisticated thinking that you do, that you say very casually, but give us a little bit of a context for how you do that in your own life.
Well, I've talked about how I approach the Bitcoin thing. So I
Yeah.
said to everybody, I'm irresponsibly long. And everyone's like, oh my God, what does that mean? It meant that I had decided that this was the single best opportunity I'd ever seen in my entire career. And I wanted to take maximum advantage of it. So, first rule of thumb was okay, what can I lose? I
Mhm.
can probably lose 50 or 60%. And considering that was pre this period, because now it's all gone up, 50 or 60% of what I put up. What could I make? I figured I could probably make 20x.
Mm.
So that's a 40-for-1 risk reward. I thought, okay, that's the best you're ever going to see of something like this. So then it's like, okay, how much am I going to risk? Well, I'm going to put all of my actual savings in it. Now, why? Because actually, most of my savings are in my houses, my Real Vision shares, and I have income streams. So I can repair my balance sheet pretty quickly. So I didn't, and then I won't use leverage. I do
Right.
use leverage in trading sometimes myself, but not with something this volatile where the risk reward is so massive and the potential expected return is so big. You don't need volatility. You don't need leverage to make even more money. That's just stupid. So, so that's how I approached it. Um, different markets. If it's a bond market trade, which is very low volatility, I might take leverage by using futures or options. With options, I'm defining what I can lose.
Right.
And with futures, okay, that's a bit racier. So you have to use stop losses to say how much am I prepared to lose of my capital on this particular trade? And with leverage bets, you tend to try and not put massive bets on. Occasionally, a few times in a lifetime, the bond trade about a year and a half ago was worth putting some big leverage into and taking a lot of risk. But they only come across occasionally. People are too eager to put leverage on and take the big bet. When really, if you heard me speaking today, I'm not getting excited about anything. So why would I, if there's no big, massive thesis that
Mhm.
you really understand the situation, you understand your risk rewards, and you're prepared to take some real risk, why bother? You know, that's so I caution people because I see people overtrade all the time.
Right. So interesting. So basically, you're saying 100% of your YOLO fund is in crypto, but how do you size that relative to your other assets
It's all the,
when you think about more broadly?
it was all the cash I had, so that's how I sized it.
Yes, but